This is the tkal earnings recap, number 003, for week of August 17. 7 deep dives went up on tkal this week, and they told one story. Here it is. Stop annualizing the margin windfall. The next leg belongs to companies that turn price rent into cash or durable capacity before contract pricing rolls. Those still financing inventory into the peak will give the earnings back first. Mature node rent found the income statement. Nanya grew revenue 68.2% quarter-on-quarter with flat bit shipments, keeping 96.5 cents of every incremental NT dollar as gross profit. 4 weeks later, it committed up to 346.6 billion NT to Fab 5A. Macron X printed 19.125 billion NT of sales at 64.4% gross margin and 46.9% operating margin, but roughly 900 million NT of gross profit was an inventory writeback. Its 38 billion NT expansion starts contributing in 2027, while depreciation waits until 2028. Both caught a shortage on paid-for capacity. Both now have to prove the new capacity outlives the rent. The warehouse earned before it converted. Longsys earned 10.577 billion RMB on 59.08% storage gross margin, while carrying 25.777 billion RMB of inventory, 60.12% of assets. H1 operating cash flow was negative, 3.151 billion RMB, though the derived Q2 burn narrowed to roughly 276 million RMB. Team Group printed record 26.47 NT EPS as revenue fell 16.11% quarter-on-quarter. Its trailing cash statement showed 3.319 billion NT of net income against negative 8.661 billion NT of operating cash flow. The margin is booked. The next cash statement decides whether the inventory position was harvested or merely refinanced. The asset mattered more than the volume. BWin pre-announced 7.0 to 7.5 billion RMB of H1 net profit on 15 to 16 billion RMB of revenue, then fixed purchase cost in $3.361 billion US dollars of 2-year LTAs. Puya's revenue rose 336.67% to 3.959 billion RMB, and operating cash flow swung to positive 945 million RMB. The acquired Sky-High memory business supplied about 59% of revenue and roughly 508 million RMB of X items profit after a purchase near 69 million US dollars. One company locked the cost basis, the other bought the earnings stream. These were procurement and deal-making wins. Their durability belongs to the contracts and acquired assets, not the cycle alone. Record margin was mostly a refund. Corsair reported a record 33.2% gross margin. Gross profit was $104.3 million, but a tariff refund of $15.6 million supplied about 500 basis points and 79% of the year-over-year expansion. Excluding the refund, Corsair reported a GAAP net loss of $5.7 million. Gross profit rose 3.3% on revenue down 2%. Memory revenue rose 17% while management guided its 23.4% memory gross margin toward the high teens by Q4. The durable line is memory pass-through, and management is already telling you the spread closes. Here's the call. Treat this as a holding period margin cycle, not a durable earnings reset. Favor verified cash conversion over headline EPS through Q3. If inventory days and operating cash flow do not improve before contract pricing flattens, step back. Now the board. Macronix, record margin, with a writeback and delayed DNA, Puya. The acquired asset repaid its purchase price. BWin, 2 years of cost locked and cycle exposure with it. Longsys, 59% margin, while the warehouse still burned cash. Nanya, Flatbits produced a 96.5% incremental margin. Team Group, record EPS with trailing cash flow still negative. Continuing down the board. Corsair. The record margin carried a one-time refund. What to watch next? On BWin's August 25th, Full H1 report. Positive operating cash flow against more than 7 billion RMB of profit supports sell-through. A negative or trivial print says the profit is still inventory and receivables. On Team Group's September 10th monthly release, revenue materially above July's 2.545 billion NT supports the mix shift. Flat revenue against guided DRAM price gains says bit volume is still contracting. On Macron X's next monthly revenue and Q3 margin, July's 7.725 billion NT is the base. Another advance with less write-back support extends the shortage. A stall with more accounting support shortens it. On Corsair's Q3 memory gross margin, holding 23% or better breaks the closing spread read. A print below roughly 22% says rising DRAM cost is passing through revenue faster than profit. That's the week. Every one of these prints has a full written deep dive, every figure sourced at tkal.news/earnings. Not investment advice.